What's going on, guys? Welcome to another video. We're going to be going over two stocks that you should watch for this week. As we can see, not many companies are reporting earnings, so it's going to be pretty slow. But we're going to be watching two stocks for this week, and we're going to be going over some potential plays on these stocks. So the first one, of course, is going to be Bed Bath and Beyond, which reports earnings Wednesday before the market opens. And I apologize in advance for a later video. This is a late video just because I was busy with things. But Bed Bath and Beyond is a stock that you should watch. We're going to be a little bit bearish on the stock, even though it is down around 77% in the past year. Things are not looking good for this company, especially with the upcoming recession. And a lot of analysts are downgrading it. Bed Bath Beyond is reducing store hours and also turning down the air conditioning to cut costs. So they're really struggling right now. A lot of analysts have a sell rating on it as well. And earnings have been going downhill for quite some time. So things are not very good. So we're going to be bullish or neutral on this stock. So how do we play this? So there's numerous ways to play Bed Bath and Beyond. We're not going to be buying puts, which would be the obvious answer for a bearish play, just because buying options during earnings is pretty risky, because if the stock stays flat, you're losing all your money on those options contracts. So instead, what we can do is a call credit spread, which allows us to make a bullish neutral bet on the stock. And if it doesn't move at all, we're making money, which is why it's a very good and safe strategy to play around options earnings. So something we could do is head over to the options chain. We could do either a July 1st or July 8th expiration. For this example, we're going to be doing the July 1st. So what we're going to be doing is we're first going to be buying a call. So we can go ahead and take a look at the strike prices. Let's take a look at this $8 strike. This is just a trade example. So we're going to be buying the 8.5, then head over to the sell call, and we're going to be selling the one over here, the $8 strike. And as we can see on the right side of the screen, it's going to be turning into a call credit spread. So let's actually zoom out a little bit so you guys can see. There we go. Going to be a call credit spread, and as you can see, we're selecting a credit of $7, which is pretty good because or $10, because we're only putting up front a collateral of $50. So this is easily a 20% return in 1 week, less than a week actually, because it's already Tuesday. So a call credit spread giving us a 20% yield in less than a week, as long as the stock stays below $8 per share. Otherwise, we're going to be losing a collateral. But this is a pretty safe bet. We do have over an 80% chance of profit. I like this trade, and we're pretty bearish on Bed Bath and Beyond. So that's one thing that you could do for the stock that I would recommend. Or if you want to play a little bit safer, you could go up the strike prices a bit. You can sell the 8.5 and then buy the $9 strike if you want to be a little bit safer. Next stock on the list is going to be Micron. Micron is a solid company. They are down around 50% from its all-time highs, which it actually almost hit $100 per share. But Micron, it's at a pretty big discount, so you can just buy and hold shares, mainly because this is also a dividend-paying stock. So every 3 months, you are getting a little bit of money back for every share that you own of Micron. Even though the share dividend yield is pretty low at 0.5%, it's still a nice bonus just for holding the stock and waiting for it to appreciate over the long term. And analysts have really good ratings on this stock as well. BMO Capital has an outperform rating. Returns are gaining momentum at Micron Technology. As you can see, 89% out of 36 ratings have a buy rating, which is pretty huge. A lot of people are very bullish on the stock just because it's at a pretty good discount. Things are looking pretty good for this company. And Morningstar still has their fair value at around $90 per share, which is also pretty sweet. So you can just buy and hold shares for the stock, or if you want to play options and try to get shares at a cheaper price, you could do our favorite strategy, which is actually the cash secured put. So something you could do as an example, is selling a put for the July 1st, this $55 strike. So it's going to be around a 79-80% chance of profit. And as long as Micron technology stays above $55 per share by the end of the week, you're going to be making a nice 1% return. Now, that might not sound like much, but this is going to be a safe option strategy because if you do end up losing on this trade, which is when the stock price goes below $55 per share, we are going to just own 100 shares at our strike price of $55 per share, which is a win-win situation in my opinion, because you're getting paid to own the stock at a cheaper price, because currently the stock price is at $59 per share, and if we do get assigned shares, we will be owning them at $55 instead of $59, and you're getting a credit of $73 for this trade, which is pretty sweet. So that's about it for this video. Thanks for watching.